Hi, I'm Elliott Prechter, and today I'd like to walk you through how we use EWAVES Live in order to find trading opportunities. So just so you know, EWAVES is the world's most advanced Elliott wave analysis engine, and we're going to show it to you in action today. Now the first thing I'm going to do is I'm going to go over to elliottwave.com. ElliottWave is a partner of Qualitative Analytics, and they have access to EWAVES and EWAVES Live, and they use it in many of their services. One of those services is their Flash service, which we're going to talk about today. Flash is a recommendation service. It covers stocks, ETFs, and futures. And today I'd like to talk about stocks. Now, the first thing you'll notice here is that there's a mixture here of long and short positions. And that's because we analyze each individual stock independently and formulate an opinion on that individual stock. So on the Stocks Flash service, we're not really looking to call the overall market necessarily. We're just kind of trying to see what each individual stock is doing. That said, the overall market does have a big impact on the behavior of individual stocks. In fact, I went ahead and based on the start prices and the last prices here, I calculated a P&L. Let me pull it up and I can put it right next to here. And as you can see, the short positions and the long positions are quite different. Like this long position here in Apple is almost up about 13%, this long position in PODD, up almost 40%. You know, all these kind of high moving positions are all on the long side. The one exception, I suppose, would be ACGL, which is a short position, up almost 7%. But that's because the market has been largely moving up. If you go check out, I don't know, let's check out the Qs right here. You can see just recently we've had a big move up. And if we kind of zoom out here, let's look at the weekly time frame. You know, we've been moving up for a while. So we would expect the longs to generally have outperformed. Of course, that doesn't necessarily mean they will continue to do. And one reason why it's important to have short positions on as well is because markets can turn very, very quickly. In fact, right now, by some measures, risk is quite high. If we take a look at the VIX, just as an example, complacency is high. Look at 12.25, incredibly low, much lower than we've seen in a very, very, very long time. So yes, it's very important to I believe, maintain independence on each individual asset. And that way you don't really care whether the market goes up or down. You're just kind of looking for particular trading setups and executing them, whether they're long or they're short. All right, now here's the fun part. Let's look at some of these and talk about the trading setups, talk about how we found them using the eWaves engine, and kind of go from there. So let's start with the first on the list here, ACGL. This is an inverse position. And let's go ahead and pop that guy down, and you'll see we have a chart. Now, if you know your Elliott waves, you'll understand why we went short at the time we did on ACGL. So we've got 5 waves up, 1, 2, 3, 4, 5. This is a typical impulse wave. The only aspect of it that's a little unusual is that wave 4 here almost overlapped wave 1. Not quite here, it's 73.50, whereas wave 1 here was 72.28. So very close. So this is not exactly a powerhouse move. You know, it may look like one going from 40 to 90, which is more than a doubling, but in terms of the wave structure, this is actually kind of a weak third wave. The corrections are quite deep and almost overlapping. And then in fact, in the 5th wave here, we have what's called an ending diagonal. We've got waves 1, 2, 3, 4, 5 subdividing into 3-wave zigzags, A, B, C, A, B, C, A, B, C, A, B, C. And this one was too linear to have any discernible substructure. So there's just a 5th wave there. eWaves calls these kinds of linear moves unknown moves because we can't really subdivide them. So we were just assuming based on this context that this is a zigzag into this high here at $90.65. So the reason that I took this was I found this among many, many stocks by using a scanning tool in eWaves Live called the Wave Finder, which I'll show you here in a second. But let's talk a little bit more about this setup. I got the idea for this setup from a book called Visual Guide to Elliott Wave Trading, which is written by Wayne Gorman and Jeffrey Kennedy, both of whom worked at EWI for many years and are absolute Elliott Wave experts. So what they suggested was you look for this ending diagonal, and then you also look for either a break of 4. Now, as you can see, this did not break 4 yet. Or you can also look for a break of the baseline, which is if you imagine a line going between 2 and 4 here, this kind of line going up, that's the baseline. And as you can see, this broke through that line. And that gives you kind of an early signal that, okay, we're a little more confident that this ending diagonal is done than we were at this particular peak here. Now, if you're very aggressive, of course, you could short right at this peak. But if you're a little less aggressive, you can wait for that baseline to break. And if you're even more conservative, you can wait for wave 4 to break. So this is somewhere kind of in between those two extremes. We waited for the baseline to be broken before taking action, giving us a little bit more confirmation of this wave structure being completed. So how did I find this? Well, let's see. Let's go into eWaves Live. This is the eWaves Live portal. Actually, before I show you how I found it, let's just take a look at it now and see what it's been doing. So there's ACGL. We can jump to it. So as you can see, this is the same wave count as our entry point. So this entry was back on November 21st, where this had just kind of started to poke down there. And as you can see, we broke down below 4 and heading towards the 2 level. The best wave count now is 1, 2, 3, 4. So we're kind of in a very short-term corrective move here, and then we should probably continue to move down lower. We've since moved the stop from the all-time high to this wave 2 here. If that were to be taken out at this level, then obviously you would not want to be in this anymore. So we're kind of continuing to track the position here, and I think if we do come down and make a third wave, then we'll probably move the stop down to this 2 of 3, which is a level I like to move the stop to. Very, very conservative with moving the stop. Usually start at the extreme or the origin of this new wave here, then move to the 2, and then maybe move to a lower degree 2. But you have to be very careful when moving that stop, because you can easily get stopped out on a move without actually invalidating the wave structure and changing your opinion on this asset. Now, as you can imagine, there's hundreds and hundreds of stocks out there. So if you want to find a stock that has an ending diagonal setup like this, how do you do it? Okay, well, that's where the Wavefinder comes in, and I'll show you exactly how I found this setup using eWaves Live, and then how I was able to recommend that for EWI's flash service. So let's go to the Wavefinder, let's turn it on, and let's narrow down our markets to just US stocks. Okay, and then let's select a Wavefinder template. I don't remember what template this is set to. I believe this was set to trade flats. But let's look at ending diagonals. Click that, and lo and behold, there's our arch cap little group. Now, the one difference when the Wavefinder is on is you will see the actual target wave here, which is this wave 1 that we're currently in. 1, 2, we're working 3, then 4 and 5, and that'll be this wave 1. So this wave 1 is the wave that we're finding with the Wavefinder. The wave is always a currently unfolding wave, because obviously that's what you care about in a real-time market. So the wave that we're looking for in this ending diagonal setup is a wave that has an expected duration between 80 and 400 days. Now, this is important because you don't want a wave that's too small. That wouldn't be very useful. You probably also don't want a wave that's too large, depending on the time horizon you're interested in. The type of this wave is an impulse wave. Again, 1, 2, working 3, 4, 5. That's an impulse. Those are obviously the best waves in order to trade. We have a break here. It's saying, okay, we have an impulse wave with a certain duration, but we also want to break certain key levels before we consider it as interesting. In this case, I set it to 4 of the prior ending diagonal. So that would be this key level right here, 8101. Now, you don't have to wait for it to break 4. That is actually quite a late entry in my opinion. If you look at our original entry, you'll notice we entered earlier than that. Now, we didn't enter at the exact high. We waited for this baseline to be broken. And if we want, that's easy. We can change the template here and say baseline of prior ending diagonal, turn that on, and turn off the 4 prior ending diagonal. Okay, so you'll notice it didn't actually change anything, except we did find another result, because now we're being less strict. Instead of breaking 4, it's enough just to break this baseline right here, which of course this still has done. Now, the last thing on here is the limit. And the limit is set to prior ending diagonal. That basically means that if this move moves past the start of this prior ending diagonal, which is at 73 and 50 cents, then, the market's gone too far and it's just too late to act on this setup. So setups are valid for a certain period of time. In this case, it's valid once this baseline is broken, and then it's invalid once it goes below 4. So there's this little window of time where you have this setup here that is considered a viable setup according to this template. Now, of course, we have different templates. We got flats, we have impulses, triangles, and 2 different kinds of zigzag setups. So using these different templates, plus with hand modifications, if you want to change any details of the recommended built-in templates, we can find setups. And this is exactly how I found the setups here that we actually ended up posting to eWaves Live. So it's nice to see that this market has moved down. One thing about eWaves is it always gives you the top wave count, but right now it does not provide alternative counts. So that's why having some experience with the wave principle can be useful. So we have to kind of put on our thinking caps here and say, well, what if this is a leading diagonal 1, and this is A, B, C done, or almost done, 2, and then we're going to blast off. And you might think, okay, this could be a leading. But there's a few things to keep in mind. Leading diagonals are quite rare. Ending diagonals are very common. So right there, statistically, you know, if this is a good diagonal, it's almost certainly an ending diagonal. But secondarily, wave 3 in an Elliott wave sequence cannot be the shortest wave. So since wave 1 is larger than 3, wave 5 has to be even smaller than 3 in order to keep that rule in place. So if this really was a leading diagonal 1, this market doesn't have the space to continue higher. So it seems highly likely that this is the correct wave count. But of course, we'll have to see how the market plays out because there are absolutely no certainties in any of this. Let's move on and look at one of the long positions here. Let's close ACGL and let's look at Apple. Okay, now this was back on October 31st when markets actually have been moving down quite a lot. There was a huge amount of fear in the markets, and we bought Apple and went long before anyone else was even thinking the markets might move higher. But again, you can see we had 1, 2, 3, 4, and then we were going to move up. Now I found this one using eWaves Live again, using something called the zigzag early setup. Okay, this identifies a zigzag, in which case this is A, running flat, B, C, this is zigzag. And it's early, very early. In fact, what I did with this is I said, okay, what I want to see is a break of the baseline of C of the zigzag, which would be this 2-4 line here. So it was a very, very minor break here before I said, okay, that's enough for me to go ahead and jump in. Now, there is no free lunch. So if you're earlier, you're more likely to be wrong. If you're later, you're more likely to be right, but your stop is further away. So in the end, I think it ends up being kind of a wash. Usually this was a very early setup right here. I'm quite happy with this one. Let's look at where Apple went to. Let's go ahead and jump to Apple here. And you can see, let's zoom in, and it went up very, very nicely from that entry way down here and has continued higher. If you want to take a look at the larger structure here, though, you'll notice that we've got 1, 2, 3, 4, and then we are working 5, and that's going to eventually form a major peak here in Apple. Now, this 4 and this 2 are quite out of proportion, in my opinion. That's not something you want to see. That's not common, so it's possible this could be labeled differently. You can certainly see, though, why it likes this market moving a little higher, because it really needs to take out this 3, which it hasn't done yet. 198.23. The highest we got here was 195.99. So really, for wave 5 to be done, it really needs to at least take out this 3 here. So again, you know, we've been long and been bullish, but a lot of these wave counts now are starting to mature, and the VIX being very low, I would say now risk is actually getting quite high on these stocks that were long. One thing, again, that I really like about this early entry is how tight the stop is. Again, if we go back to our original entry, you can see getting in around 171, and look, the low here was 165. It's just very, very close there. There's not a huge amount of risk relative to the gains if it were to make that new high, which we did expect, because again, this is a zigzag. It's a nice choppy sideways move. It channels really, really well. You can see these parallel lines right here. This is just a classic corrective form. So even though, again, there was a lot of fear at this low, we were very confident that this was a corrective move. One last thing I want to say about Apple before we move on is just, you know, another clue that this is going to be a 5-wave move is just if we zoom out here, you'll see that this was the all-time high in the Russell in 2022, January 2022. We had a clearly impulsive move down on the Russell and a lot of the small cap indices, but on these Magnificent 7 stocks like Apple, they did not look impulsive. In fact, this is one of the best double zigzags I've seen in a long time. Got a nice triangle B there for the 3-wave Y. Flat here, correction in between the ABC for the 3-wave W. there's just a very nice and, deep X wave. This is exactly what you want to see for corrective formation. So it's not a surprise to see that we're forming a 5-wave move here. But you do have to realize this is, 5 within a 5. So when this thing ends here, we could see quite a large drop, which I wouldn't be surprised to see because the Magnificent 7 stocks are extremely overvalued right now. So just from a fundamentals point of view, that also matches up with our wave analysis from the E-Wave system. Now, one of the other major Magnificent 7 blue chip stocks we have position on now is Microsoft. And from a trading point of view, this is less interesting. I think Apple was a really good entry. This one, we missed it at wave 2. I was actually still working on the template system back then, just to give you an idea of how recent all the stuff is that we're doing. So this one, it wasn't until the wave 4 pullback that we finally were able to get an entry point and get long Microsoft as well. However, I'm very cautious here. If this thing were to pop up to one more new high, we'd probably just go ahead and just get out immediately, because this is 1, 2, 3, 4, one more move up, and that should finish this entire move going up from November. So I basically, what I'm showing you here is that Microsoft is in a very similar position to Apple. And in fact, if you've been doing your homework recently, you know that the Magnificent 7 stocks are holding up all the blue chip indices, and that's the only reason they're moving higher. And so when these stocks turn down and finish their 5-wave move, it's very likely that will be the end of this rally, end of this large rally we've had since October of last year. Now, I'd also like to show you a really fun one here, which was PODD. This was the one that is actually currently up the most. It was fairly high risk entry because this was kind of catching a falling knife. So let's pull it up here in EWAVES Live, take a look at the wave count. Okay, let's zoom in. So here's our falling knife. We've got 1, 2, 3, 4, 5. I mean, just this relentless kind of downtrend. And at the time we actually took this on, as you can see, we were almost at a new low. This market just been going straight down. So, a normal trader, I think, who uses moving averages or, other approaches like that, generally like momentum-based approaches rather than a fractal pattern recognition system like E-Waves is, would never want to catch this falling knife. It's too scary. But we're looking at things in a way that other people aren't. So we're looking for major turning points before everyone else is aware of them. So in this case, we had 5 waves down, we had a 1 wave up, a 3-wave move down for wave 2. So we're able to get in on this very, very early. And again, we had a tight stop here. So if we were wrong, we just get stopped out for a small loss. But the potential here, if we retrace up to wave 4 of 3, which is around $210, is quite large. In fact, that's a near doubling from current levels. So you can see what's happened since this entry point, which is right around here. We've zoomed up higher. Most of this right here is a wave 3 of 3. So that's telling me most of this powerhouse move is actually done, because 3 of 3 is where most of the price action happens. You can see the momentum is already starting to slow here. So I wouldn't be surprised to see a 4 or 5 and kind of finish it off, but not go too much higher. And now we've reached 198. So, we're getting close to this key level of 210 here. So at some point, it may be worth taking something off the table here with PODD. This has been just an incredibly powerhouse move. But again, that's because we bought it at such a low price. So if you get in at these really low prices on a falling knife, it doesn't take a large retracement to the other side in order to generate a large percentage move. So yeah, this is really interesting because, again, if we zoom out, you can really see what a falling knife this was. Bam, just like that. And we were able to get in very close to the low of this huge decline and anticipate this move up. And as far as I'm aware of, there's really no other approach to doing this other than using Elliott waves that allows you to find moves that are like this. Because, again, we're using patterns, we're using the wave structure to anticipate changes in trend as opposed to following changes in trend. So it's quite different there. So yeah, I was really happy with how this one turned out. Very interesting position as well. Now Hershey's here is a similar falling knife. This hasn't moved very much, just a couple points, I think about 1% down since we've entered it. But this is also a falling knife, just moved straight down. But as you can see, we had this 3-wave move up here into wave 4, which means we're rolling over into a wave 5. So even though this is a similar downtrend, this one's saying to go short, whereas the PODD was saying to go long. Again, that's based on the Elliott wave fractal structure here. So let's take a look at HSY. Let's see what it's been doing. Okay, let's zoom in. Yeah, very persistent downtrend. In fact, we took out, I think we made a new low here, 184, 183. Okay, we didn't quite make a new low here, but we've tightened our stop a little bit, and we'll see what happens if we get that new low. Hopefully in a third wave here, then we'll look to exit sometime in the not too distant future. Now, markets are still in a bullish period, or have been recently, and so again, these counter trend moves, or rather stocks moving against the main trend, are always going to be a little bit more risky than the ones that are going in that direction. But one of the reasons we do these is because trends change. And in fact, I showed you the VIX. If the market were to change, maybe Apple, Microsoft, they go up, make one more new high, and then we get a major reversal at that point. It's going to be a good thing to have these shorts on, because they're going to continue to move lower, and then we'll get out of these long positions. So, there's a lot more of these. We could talk about them. They're all very interesting. But again, my main guide for this has been the visual guide to Elliott wave trading, to build these templates, get them into the wave finder, and just kind of go through these and look for scenarios and stocks and ETFs and whatnot that I can then deliver to Elliott Wave International for use in their flash service. But it is discretionary. I want to be clear on that. eWaves does most of the work. It does all the analysis. That's all automated. It also allows you to plug in setups. That part is automated. But when it comes down to it, there still is that human element to it. I still take a look at each one. I still will go through multiple setups and find the one that I prefer. So there is that human element on top of this, and that layer of discretion. I would love to have a completely automated system, but I'm not there yet. The programming on that is very difficult. It's almost like another level of a software on top of the software that does the Elliott wave analysis. So it's just a very slow process, but I'm very happy with the position I've gotten the software at this point. It really took a huge amount, Herculean effort, to get the algorithm this good. And again, I think the wave counts you've seen so far, and the wave counts you'll find with eWaves Live, are going to be the best wave counts of any computer software out there, in spite of the fact that it might not always be perfect. It still is by far and away the best. So that's it. I just wanted to walk you through some of these setups, and obviously gave you some ideas about market opinions. But at the end of the day, this is trading. This is not forecasting. It's not quite the same thing. I'm not here to tell you exactly what I think the market's going to do over the next 3 months. I'm much more interested in saying, let's find an ending diagonal, and let's, position ourselves for that particular ending diagonal, and let's find ourselves a triangle and position ourselves based on that triangle. So really, I'm thinking in terms of fractals and Elliott waves and setups, and relatively, short-term horizons, like maybe a few months, something along that kind of a horizon, and not necessarily years. Although that said, the Elliott principle is scale invariant, so you can set this duration up to much higher levels and look at things that way. I'm just looking for a time frame that kind of a swing trader might be more interested in. So I hope you found that informative. It gives you kind of a look into how I use eWaves Live to find opportunities in the markets. And hopefully, if you guys enjoyed this video, I can make more of them in the future. All of these positions you're seeing are live as of Tuesday, December 12th. People who are signed up for Elliott Wave International Flash Service have these positions right now. If you're interested in that, check it out on elliottwave.com.